Hey, everybody, welcome to session 4 of our Web3 Ready professional webinar series, your comprehensive roadmap to mastering the crypto laws that just reshaped professional practice in America. Now, today's deep dive on the White House Working Group on Digital Asset Markets report is part 4 of our live virtual briefing series. We began with part 1, focusing on the Genius Act that focused on stable coins and compliance and U.S. competitiveness, talked about a key takeaway of understanding the shift or risk of falling behind in stablecoin policy. The Genius Act not only passed in the House, but before that had passed in the Senate and was signed into law on July 18th. So we talked about that. The next part, the Clarity Act, we focused on token and coin classification, the market structure of digital assets, and greater legal certainty. And so the takeaway there was assessing the new frameworks and what they mean for new risk profiles for investors and professionals, but also new opportunities. Part 3, we focused on the Anti-Central Bank Digital Currency Act and took a deep dive, focused on privacy, payment choice, and CBDC limits and bans on retail CBDCs, which would be the federal allocation or equivalent of a private stable coin, and prioritizes private dollar rails for banks, for USD stablecoins under a risk-based anti-money laundering protocol. And the takeaway really was, could we balance privacy, or can the government balance, balance privacy and choice? And does that become the baseline while there are other countries that are successfully issuing central bank digital currencies, but none as large as the United States? Well, with the exception of what's going on in China. And we talked about that in part 3. Part 4 today, the White House Digital Assets Report, which really serves as the broader view, the federal roadmap from 2025 out to 2030, or at least the vision. And I'll also mention that part 5 is actually the VIP strategy session, not in webinar form, but in meeting form, where we go from information to implementation and client position. And here's what makes today's session different, because we're really shifting from individual laws, the Genius Act, the Clarity Act, the Anti-CBDC Act, some pending legislation coming out, or at least introduction of bills focused on tax rules, for example. We are now shifting from those individual laws to the comprehensive strategy. And the White House report shows how all of these pieces fit together into America's plan to become dominant in the digital assets um, uh, infrastructure, and also as a matter of legislation and regulation. So I'm Dr. Tonya M. Evans, your guide through this historic transformation. And you are seeing my experience of taking this message global from Bangkok to Geneva, from a number of different places and spaces. But I am the owner of the Advantage Evans FinTech Academy and Consulting Group. I host Confidently Crypto on the Financially Speaking podcast. It's a Sirius XM podcast, freely available wherever you listen to podcasts. I'm also the author of Digital Money Demystified, available at digitalmoneydemystified.com. My main um, um, platform, my main websites, and wherever you get books. If you order directly from me, I sign your copy and lovingly send it to you. You're just a few hundred left, because I'm usually selling those when I'm doing keynotes and speaking presentations all around the world. So if you want one, you should order it now at digitalmoneydemystified.com. I'm also an educator. I started for 17 years in um, as a law professor in the legal academy. Before that, I practiced for 10 years in a big law, two multinational firms, practiced with my mother in small firms, and then ultimately in the solo firm until I entered into the legal academy, graduated from Howard Law School, HU, you can't stop the hustle. And after semi retiring from full time law school teaching. I now do that part time. I continue to teach at Penn State Dickinson Law and a few other law schools where I offer my blockchain, crypto, and law course. But now I get to move beyond that and connect with investors and professionals like you. As I've mentioned, that my experience has of taking my message of learning the intersection of my existing areas of expertise as an intellectual property and new technologies lawyer, someone who also focuses on information privacy and administrative law. That has taken me from Bangkok to Geneva, where I trained a couple of hundred lawyers at the World Intellectual Property Organization, to Yahoo Finance, to building resources that thousands of professionals now rely on. And this isn't theory, this is practical intelligence from someone who's been in the trenches of crypto law since 2017. Now, I want you to get your phones ready because we'll be sharing critical resources throughout this session because we are far past the information stage. We are in a post information world where now we have to curate and make sense of and strategize and think critically about the proper and most effective and impactful implementation. So we always stay ahead of the curve and serve in a way that leaves people, places, and things better than we found them as this technology continues to move forward, really at an exponential pitch. So here are a few resources that I want to talk about now, and then we'll dive into what we are focused on today. If you are interested in moving from, again, information to an actual solution where you have 3 weeks to transform with me, I have worked really hard to curate different opportunities for folks to work directly with me and the transformation that requires systematic preparation, not just random education. I've developed the Web3 Ready Professional Certification Program. It's a professional survival training for the digital economy. And you it's more than just skimming articles or going to continuing education. And that's where I come in to help you transform everything from crypto laws and how they're in flux and tokenization and smart contracts to compliance, custody, and reimagining client retention and intake, and then going forward with practice, innovation, and Web3 strategy for professionals. It involves a mix of synchronous and asynchronous. So every week there is one live session. You always have access to the videos and then some work that you do in your own time, in your own way, office hours as well, and some group work. It's meant to get you from where you are today to where you want to be and where your clients need you to be in a short time. I've compressed the learning curve to support busy professionals who are ready to get up, get moving, and get to the head of the class. And so I'm really excited about putting this together in a way where we take this information, because there's only so much that we can do in the less than an hour that I have with you. So the live, synchronous, and asynchronous, the 30-day replay access, the absolute hard cap on the number of enrollments that we can process, and then others wait on the waiting list until the next opportunity to experience a cohort. So if you are interested in this, I can share more information with you at the end. So stay on to the end for additional information there. All right, let's dive in and talk about and cover today's critical intelligence briefing. There are four words that every professional must master in order to enter and become Web3 ready as we enter this new digital assets age. Crypto, obviously, capital, golden, and age. And if you can't explain how America's new digital asset strategy creates the largest financial transformation in decades, then you're about to be sidelined by history. On July 30th, 2025, just 12 days after crypto weeks and the legislative wins in the House and the signing into law of the Genius act by the president, the working group released their 168-page implementation report. And this wasn't just coincidence, this was coordination. So, the Congress started to provide the legal framework, and the administration provided the implementation strategy. And the result is the largest shift toward U.S. crypto leadership to date. Uh, that is really, really exciting. This is long awaited. It's fraught with not only risks, but also um, really captures a lot of opportunity. And I think that's what the headlines don't capture and what I hope to help you with. Here we are at one of the um, resources that I said that I would share. You can scan this QR code for Digital Money Demystified or go to digitalmoneydemystified.com, because as we talk through the impact of the digital assets report, I may say use some terminology that you're not familiar with, or you may have questions, or one of the, ascribe to one of the many myths that I believed when I was trying to separate fact from fiction in my own life. And so this is a great primer. You can read it in a very short period of time, read it out of order. Everything from crypto just a scam or a fad or only for a certain demographic of crypto bro. Is it too volatile? Is it too risky? Um, is it bad for the environment? I cover all of those myths and more in Digital Money Demystified. So definitely pick up a copy. That's really going to serve as your foundation for everything we're covering today. Now, the report organizes around five strategic pillars that will reshape how your clients do business and how you service them. One is the American digital asset market leadership pillar, the banking modernization and to, uh, uh, Operation Choke Point 2.0. So that's banking modernization, dollar dominance versus stablecoins, illicit finance combated without overreach, and five, tax modernization for digital assets. So those are the five pillars. Now, let me walk you through each pillar and what it means for your practice. So pillar one, American market leadership. Pillar one is about making America the global leader in digital asset markets. And there are four key components. Congress finalizing the Clarity Act now that it is successfully passed in the House and moves to the Senate. This act gives or would give the CFTC, the agency in charge of regulating commodities, and futures, would also have what we call spot market authority for non securities, something that we believe to be true and now will be codified and be the framework that the CFTC would work under, and the CFTC, excuse me, and the SEC would recognize as a bright line between the jurisdiction of the CFTC focused on commodities and the SEC focused on securities. And this enables both SEC and CFTC registrants to operate multiple business lines efficiently, embrace DeFi's mainstream integration, a critical part of any successful law, and also creating tech neutral regulations with safe harbors and sandboxes. Now, market leadership really we can kind of tell the story through the numbers because the numbers don't lie. 68 million Americans, or more than 68 million Americans, own some form of crypto or had done so. That's 1 in 5 Americans. 72% approval for some form of pro crypto policies that clarify what is good versus bad, what is fraudulent, the difference between a security and a commodity, the role that yield and interest bearing uh, types of digital assets, what role they play in the economy as well. And that is important too. And a striking number, the amount of venture capital money that has been deployed just in the first quarter of 2025 alone, $4.8 billion. So a lot of the headlines have grabbed the attention of VC deployed investment into artificial intelligence. And I'm quite interested in the intersection of AI and decentralized protocols. We call it DAI, or decentralized AI. I wrote an interesting article about that for Forbes, so you can look that up at Forbes.com under my name. But the point of all this is not fringe. At least it's not anymore to the extent that it was. This is mainstream America taking note of the digital asset economy. And that's why I want you as a professional to do so as well. Pillar number 2, banking modernization. So, pillar 2 addresses the elephant in the room, access to banking. And there are 4 priorities here as well: to end industry wide debanking. That's Operation Choke Point 2.0. I testified about that and the harms of Choke Point 2.0 before the House Financial Services Subcommittee on Digital Assets back in 2022 or 23. Don't hold me to that because I don't have the specific date in front of me, but at least 2 years ago, probably 3. Also, to clarify permissible activities, so custody, tokenization, stablecoins, and blockchain use, and having transparent charters and master account processes by the Fed for banking purposes, and also risk based capital rules that are aligned to actual, not perceived or proposed or supposed risks, actual risk and harm. And here's what this means practically speaking. Regulators launching crypto innovation efforts, master account and charter transparency, no discrimination against lawful digital asset businesses so that they are no longer debanked. Or not permitted to get a bank account in the first place, and technology neutral supervisory guidance as well. And that really takes us from debanking to leadership. And the timeline for implementation to end of debanking, which would be immediate, the full integration of the plan, which would be phased over 6 to 8 months, um, and the expectation of interagency statements and examiner guidance, which should be on an ongoing basis. Now, pillar 3 is focused on dominance via stablecoins. And pillar 3 recognizes stablecoins as the future of the dollar system. That includes stablecoins to modernize payments infrastructure. And then the focus on advancing U.S. dollar strength globally, especially given that it's declined globally over the past 5 years. Um, to create public-private rails for cross-border competitiveness, because this technology is not beholden to a particular border and is really global technology, that the public-private rails need to meet the moment as well. And the dollar strategy is really focused on the Genius Act implementation. So the 4 implementation priorities are expeditious implementation of backing, disclosures, and operations, the anti CBDC protections to preserve choice and privacy. So that means um, the Genius Act moves forward to protect, preserve, promote, and to encourage private business and industry while not having the government be a competitive um, option. Now, good, bad, or otherwise. So we're talking about the intention of the administration without respect to the good, bad, the pros, the cons. I talk about that um, and take a deeper dive on anti-CBDC and talking about the comparison to privately issued stable coins by large corporations. Um, and so that is a question that you should work through the issues, the implications, working through and thinking through with your clients. And also international standards promoting US interests, and finally strategic digital asset stockpile uh, legislation, and in terms of the executive for the agency's approach to some type of strategic stockpile, including the Bitcoin reserve and the digital asset stockpile. The time as it relates to the timeline, when could we expect all of this to happen? The Genius Act frameworks are rolling out now. Q1 of 2026 is the full operations target. Devil's in the details there, so stay tuned. And the strategic Bitcoin reserve, there's been some talk and some controversy around that. I think Scott Bessent made some comments about the United States government not buying Bitcoin, and that kind of sent shockwaves and buyer's remorse through the crypto industry that fought so hard to have a very pro crypto administration that would not only clarify the area of legislation and regulation, but also be very proactive. And it was promised to the industry to be Bitcoin focused, Bitcoin centric, and to even buy Bitcoin that would inevitably drive up the price. When there was signal or some mixed signals about that, and other macroeconomic dynamics with the Federal Reserve, I think Jerome Powell will on um, August 22nd be. Uh, we're expected to see the rates fall at least by 25 basis points, perhaps. And so there's a lot going on as well that impact prices. But direct mention of not purchasing Bitcoin was also a big thing that moved the price of Bitcoin, at least from about north of 123,000 per coin, below 12,000 recently. And so that's something to watch as well. Pillar 4 focuses on anti-money laundering modernization. So Pillar 4 balances security with rights, modernize the Bank Secrecy Act, obligations for digital asset actors, strengthen information sharing on illicit finance, and protect lawful self-custody and privacy rights. And there's some key guardrails that you should be aware of. One, BSA clarity for exchanges, for custodians, and protocol interfaces as it relates to DeFi or decentralized finance, risk based controls without stifling innovation. And for foreign located actors, the U.S. effects on clarity and targeting criminals, not compliant users, focusing on actors, not the technology. With respect to AML, or anti money laundering modernization versus overreach, the implementation approach focuses on um, precision targeting of illicit finance without blanket restrictions on lawful activities, and an implementation horizon of approximately 6 to 12 months. Um, w- we're coming to the end of a legislative calendar. I think when Congress returns, they'll have exactly 2 weeks, um, 2 weeks worth of working days to get things done. And then we fall right back into the silly season of electoral politics, and very little, if anything, usually gets done during those times as we start to march toward the midterms as well in 2026. And so finally, let's take a look at Pillar 5, which is tax modernization. This is a really interesting area. There's not as much going on in the headlines right now, except that Senator Cynthia Lummis, a Republican out of the state of Wyoming, who is very pro Bitcoin and a strong proponent of the industry, and lauded and celebrated for that. in the crypto industry. Pillar 5 addresses the practical challenges to encouraging the use of Bitcoin in general, in particular, but excuse me, the any digital asset in general, because crypto is taxed as property, and therefore is subject to capital gains tax. And so, who wants to spend, the $10 worth of Bitcoin for a latte? First of all, who wants to do that at all? But to the extent that you're spending a dollar or five or 10 or 15 um, at a point of sale register, you're not going to do that if every single transaction triggers capital gains or losses. It's just the practical nature of it, and the reason for it is ridiculous, in my humble opinion. Um, and so, thinking about from the Treasury and the IRS point of view, immediate priority guidance coming from Congress. We want to see structural updates for a new asset class and planning certainty for investors and for operators. If you're operating a business, you want to accept crypto, you want to use it. So, not just for investment purposes, but also as consumers, which was the original point back in January of 2009 when Bitcoin was the first Bitcoin was mine, the first 50 Bitcoin, I should say, was mine, that first block of Bitcoins. Shout out to Satoshi Nakamoto, whoever he, she, or they are, because it could be a group of folks as well. When you think about the actions or the specific actions called for in the report, we're thinking about CAMT, wrapping transactions, de minimis guidance, or perhaps a $600 de minimis rule that says if you're using it for less than $600, there are no tax consequences. A call for the administration to review mining and staking income, timing, and for Congress to legislate on wash sale coverage, Section 1058 for loans, and to recognize digital assets as an entirely new class. That's what the administration is calling on. As it relates to the timeline for implementation, we're looking to 3 to 6 months on priority items, and congressional actions anticipated in 2026. Wink, nod, nod. So we shall see. So, what does this mean for your clients? And I'll talk you briefly through 4 scenarios that a client might face and how to advise them. And they focus on, um, uh, well, let me go through the scenarios here. The first one is focused on banking access, the next on stablecoin treasury, another on DeFi integration and coherent AML and tax planning. First one, banking relationship restoration, and that would focus on rebuilding relationships with clearer supervisory guardrails or exploring custody, tokenization, and stablecoin services, and with respect to charter and master accounts. Or maybe you have a client that is focused on creating a stablecoin treasury strategy and wants to know the best approach. And so in that case, you would need to focus on the Genius Act and making sure the client is compliant with respect to banking and disclosures, and operations, how to integrate with existing treasury and cash management, how to assess the strategic Bitcoin reserve implications as well. Scenario number 3, perhaps in DeFi market integration. So the CFTC spot market clarity would be necessary for any non-securities, and that would lead to uh, the token taxonomy, as I refer to it. What safe harbors and sandboxes might be available to a client for a novel invention or some type of product or service? And multi-line licensing for SEC and CFTC registrants so that they can have a very robust build out and not be beholden or confined, I should say, to one or the other, or worse, the uncertainty Scenario 4 around tax and AML strategy. So, compliance modernization, incorporating pending IRS guidance into policy, designing BSA programs that preserve self custody, and planning for wash sale coverage and asset classification. Now, let's talk a bit about the opportunity. We've talked about the risks and given an update on what the report um, says and what it anticipates in the roadmap ahead. But this 168-page report has over 100 recommendations and creates a historic demand for Web3 competent advisors. And that's really the opportunity to be the bridge from traditional practice, from legacy systems into crypto leadership, or at least being able to successfully spot the issue and pull in the professionals that you need in order to succeed. So, what should you do right now and over this next quarter? Start to think about your own implementation roadmap. So, think of it in a 90-day structure. So, you should be focused on four primary areas: to update, to develop, to build, and to educate. To update intake, to capture digital asset exposure, internally and also for your clients. Develop Genius Act and banking framework fluency. Build relationships with crypto forward banks, and consultants, and professionals, and educate clients on the U.S. strategy, where we are today, where we might be, um, and where we've been, quite frankly, and also the reserves and how that plays into the overall economy. We're really here at a historic transformative advantage because this is the most comprehensive embrace of digital assets by a major government. Position now for the quote unquote golden age adoption curve and lead clients through the largest finance shift in decades. I'm watching right now the Gilded Age, and there's so many parallels, good, bad, and otherwise, of this just giant leap forward, and all of the transformation, all the opportunities, all of the potential, but all of the risks, all of the dangers, and being able to level set and right size and balance will make you ready in every situation. So the question isn't whether this transformation is happening, it's whether you will lead it or be left behind. And so if you want to take it to the next level, and by it, I mean your understanding, your commitment, your focus for continuing education, for um, studying the trends, staying up to date. I offer ongoing intelligence through my premium Substack subscription, weekly implementation analysis, practical client guidance templates, early warning system for regulatory changes in multiple tiers, from essential updates to comprehensive strategies. And my From Cash to Crypto program is embedded as well with weekly micro lessons. And I can also support your success, I should say, through strategic transformation of your professional development program. So that means executive one on one consulting. If you are in the category and looking for a sizable investment and ongoing one on one consulting and coaching, auditing current client exposure to digital assets, developing response frameworks and competence roadmaps, I should say, positioning as yourself as a trusted advisor for traditional and digital assets, consumers, clients, investors, and really making a plan for yourself within your C-suite, your management pool, internally or public facing. And we can work together to do that. As I mentioned at the outset, also the cohort-based training programs. They run $3,000 to $5,000, 3-week capstone intensive covering digital assets implementation, client scenario management in much greater detail than we have time to do in a webinar, and compliance frameworks. Enrollment is capped at 20 professionals for maximum engagement and impact. Sometimes I do the Web3 ready professional. Sometimes I focus on lawyers, sometimes finance professionals, sometimes C suite executives. So stay tuned for that. You can learn more about all of those programs at proftanyaevans.com/Web3 Ready Lawyer. And for our series completion, this is something I'm really, really excited about. And I've received a lot of inquiries about this. A number of people wanted to participate, and originally it was scheduled for August 26th. I forgot. That is leading up to Labor Day weekend because why is it so early this year, 2025? So I've moved it to after Labor Day and actually will be on Wednesday, not Tuesday. We all need a moment to get back in the office and dust off the sand or whatever we were doing and get the children off to school and all of that. So we will have this VIP strategy session held as a meeting, not as a webinar, for the series completion. That includes strategy, and you can register at getweb3ready.com. We will talk in greater depth about client intake upgrades. I'll do a summary of everything that we've covered in all 4 webinars. We'll talk compliance workflows and thought leadership. And it includes all of the worksheets, the tools, a signed copy of Digital Money Demystified, and premier newsletter access at the top tier. That's a $997 value of the premier newsletter access alone. And you can do this. I can help. If you're ready to grow, let's go. Access everything at getweb3ready.com, or what you see currently on the screen. I also have um, a bit.ly URL, and you can use bit.ly/Web3 Ready Pro VIP for information on how to enroll, submit your application, and what the costs are, and all of the options and the opportunities. So, with that, that brings us to the closing. I'd love to answer your questions about the White House report and how to implement these strategies in your practice as well. And so, any questions, comments, concerns, discussion items, feel free to email me, and I will follow up in due course. If I'm not able to do so in a quick email, then make sure that you join the VIP session where you will get your answers to your question live, focusing on practical implementation and next steps. Thank you so much for joining today's analysis. Remember, this isn't just policy. This is your competitive advantage. The professionals who understand this strategy will be the ones that clients trust as America becomes the crypto capital, dare I say, of the world. The next opportunity for the next webinar and all the information will continue to be shared at proftanyaevans.com. So don't miss it. Get Web3 ready. Thank you so much for joining me for this session and the entire series. And I look forward to seeing you in the VIP session.